Hello everyone and welcome back to my channel. In today's video, I'm going to show you how to become a discretionary trader. Discretionary trading is like an art where the trader utilizes their skills and most importantly, their experience. On the other hand, mechanical trading is more like a science, relying on systematic rules within a trading plan. Now, I'm not saying mechanical trading is bad. For a new trader, sticking to a mechanical plan is great. It removes subjectivity. However, as you gain more experience in the markets, it is only natural to transition into a discretionary approach. You will become more fluid in reading the markets. This video is going to be purely practical. I will explain the thought process of discretionary trading with a live trade breakdown. A trade I took without the need for a trading plan with static rules. Instead, I relied on understanding what the market is telling me. So if you are interested in that, stick around till the end and don't forget to hit that like button and subscribe to my channel so you won't miss any upcoming videos. Let's get started. Now, before we start the actual trade breakdown, I want to give my personal opinion on what is the main or the core difference between a discretionary trader and a mechanical one. And again, this is my personal opinion. Now, I believe that a discretionary trader trades what he sees. Now, what do we mean by that? When a discretionary trader opens a chart, he now tries to understand what the market is telling him. So he sees the current structure and tries to come up with an idea of whether the market is trying to go up or trying to go down. Let's say, for example, he forms that idea of going up. And now he starts looking for confluences to support that idea. For example, do we have a reason to go up? All right. And maybe, yes, we do. We have a buy side liquidity. We have a pull on the upside. And now he starts framing the same narrative for the sell side. Do we have a reason to go to the sell side? No, we don't. We already burst the sell side liquidity and we hit, I don't know, maybe an order block, a fair value gap, and there is no reason for price to visit the sell side liquidity again. So now we have that idea of going longs, right, to the upside. And now the discretionary trader starts going to the lower time frame. So time frame by time frame, and now he looks for narrative or context. So how will price travel from the current area to that pool of liquidity on the upside? So now we start forming scenarios. So maybe the first scenario, price would find support on this order block, or maybe we can use this breaker block to go long. As you can see, the discretionary trader is more fluid, right, with the market movements. He's not limited to only one scenario or only one trading environment. Now, on the other hand, a mechanical trader, he doesn't trade what he sees. Instead, he trades what the trading plan is saying, right? So when he goes to his trading plan and it has written rules, the first thing he checks the first condition or rule. Do we have that condition on the chart? No, we don't. Now, if we don't have that condition on the chart, that mechanical trader will not do anything. He doesn't try to predict where the next draw on liquidity is. So for the moment, the market is irrelevant. He doesn't care of what the market is doing and he doesn't want to know. All he cares about is, do we have that condition on the chart? If we don't, he sticks to his plan and he doesn't do anything. So this is the core difference between a mechanical trader and a discretionary trader. And now let's start with the trade breakdown and you will know exactly the thought process of a discretionary trader. So for this presentation, I want to use this trade, this particular trade. It fits our lesson for today. So the Swiss franc against the Japanese yen. And here is the execution. I shared that on my Twitter account, so you can go and follow me there. And now let's transition into the chart and I'm going to show you exactly the thought process behind this trade. So let's go to the chart. And as you can see, the Swiss franc against the Japanese yen. And currently we are on the weekly chart. So to be a discretionary trader, you need to comprehend the bigger picture, right? Again, you need to trade what you see, and you need to let the market tells you what it wants to go. In order for you to do that, you need to understand the higher time frame. So we are on the higher time frame right now. So this is the weekly. So on the weekly, and focus on this candle right here. So this candle right here opened right here on this level right here, traded to the downside, and then immediately rejected and ended up an up close candle. And as you can see, that the rejection happened on a higher time frame level, which is this bullish order block right here. So we can see that this order block is being respected, and we have a strong rejection from it, and we can expect price to go to the upside. Now, do we have a reason to go to the upside? Yes, we do. We have this pool of liquidity, this consolidation, right? Again, consolidations are a pool of liquidity. We have also this equal highs right here. So price is rejecting from a bullish PDRA, which is this order block right here, and we have a reason to go to the upside. We can also see that the order flow is bullish, right? So we can clearly want to look for longs instead of shorts. So on the weekly, I formed the idea of going long instead of shorts. We have this order block, we have a reason to go to upside. The overall trend or the order flow is clearly bullish. So this is what the market is telling me on the weekly. The market is telling me that it wants to go to the upside, right? So as you can see here, I don't have any trading plan. I don't have written rules. I don't have anything. I'm simply trading what I see. Now we have the weekly pointing to the upside, and we have that idea of going long. Now we go to the lower time frames. We will go from time frame to time frame and see what the market is telling us, right? So let's go to the daily right now. So what do we have on the daily? We can see that we have a market maker buy model. So this is the original consolidation. We have an accumulation of sharp side here. Price, after it hit that order block, we have a shift in market structure. So again, price hit that order block, and we have a reason to go up, which is to attack this failed swing side here and this original consolidation. So here we have a smart money reversal. During the smart money reversal, you want to see either a sweep on liquidity, in this case we have that, or an SMT divergence. So this is what a market maker buy model looks like. So we have here the original consolidation, we have an accumulation of shorts right here, right? Maybe we have another accumulation, and price now hits a higher time frame level. In our case, we have an order block. It can be a fair value gap, a rejection block, a breaker block. It doesn't matter. And here we want to see something like this. So this is a price consolidating and then expansion and consolidating right here. Another expansion. And when price reaches to this area, you want to see either one of these two things. The first one is you want to see sweep, right? And then rejecting heavily. And we do have here. So a sweep first, tapping into that higher time frame level and rejecting from it. And now we can expect a move to attack this original consolidation, and the market maker buy model is now completed. The other scenario is something like this. So the market tapped into this higher time frame level, but we don't have a sweep. So now you can look for an SMT divergence between another correlated pair. So if this pair didn't take liquidity from here, maybe the other pair, for example, Euro USD and GBP USD, the other pair took liquidity from here. So if you don't have an SMT divergence, this is not a favorable market maker buy model, right? So this is just a side note of how the market maker buy model or sell model looks like. So we have a sweep on liquidity. This is smart money reversal. Why it is smart money reversal? We have this change in the state of delivery. So this is an order block right here, price traded above it, right? And we also have this breaker block right here. We have a fair value gap expansion to the upside. We can see that the market never reached to this breaker block, no retracements at all. So price is in a hurry to reach to this draw on liquidity. Anyways, we are on this day right here, so the last day of this structure. What do we have here? We can see that we have this breaker block right here. So an expansion took liquidity from here, and now violating that, this two up close candles, and this is a valid breaker block. Price pierced through it, right, and it found support right here, and now we can look for longs. So you can see that the daily is supporting that idea of actually going to here, right, to this original consolidation and to higher prices. And now let's move on to another time frame, and let's see what the market is telling us on this particular time frame. So we have here the 4 hour, right? And what do we see? We have, first of all, this dealing range from here to here, so this exponential leg, and you can see that the market retraced to discount level, and this level happened to be a 4 hour fair value gap right here. And we can see that we have a market maker buy model, another market maker buy model. It is not clear right here, but on the 1 hour you will see it clearly. Anyways, we have the 4 hour fair value gap, and we have a sweep of liquidity. So this is a high probable sweep because it happened on, first of all, discount, right, and inside a higher time frame level, which is this 4 hour fair value gap right here. So now the 4 hour is giving us 3 or 4 confluences to go to the upside. First of all, we have this market maker buy model in the making. We retraced to discount to a 4 hour fair value gap, and we also swept sell side liquidity, right? So if you want to go up, if you want to go long, you need to see sell side liquidity taken, and if you want to go short, you want to see buy side liquidity taken. And this is the 4 hour. As you can see, I don't have any rules, I don't have anything. I'm simply analyzing what the market is presenting to me. Simple as that. And now let's move on to another time frame, and let's go to the 1 hour and see what's going on in here. So here's that market maker buy model, and I told you before on that schematic that you want to see that smart money reversal happens inside a higher time frame level. We want to see sweep on liquidity before that smart money reversal. If we don't have that sweep, you want to see S&P diverges, right? So there's a consolidation right here, another consolidation, accumulation, right? So that smart money reversal, we have this candle right here. We have a change in state of delivery. How is that? The delivery on this candle was sell program, right? Why? To take the sell side from here. The next candle closed above this, so now we have a change in the state of delivery, and now we are on a buy program. Price expanded to the upside, and now we have a breaker block closed above it, found support from here. So you can see that the 1 hour is pointing to the upside right now. And as you can notice that we have a market maker buy model inside of a market maker buy model. So we have this 1 hour market maker buy model, and we also have that daily market maker buy model. So we have a lot of confluences to go to the upside, right? So the first draw on liquidity and the second draw on liquidity. And this is what the market is telling us on the 1 hour time frame. And now let's move on to the time frame that we want to look for entries, actual entries, right? And let's go to the 5-minute time frame. So once price found support on that 1 hour breaker, so retraced, now we want to look for indications of longing to that draw on liquidity, and we do have that here. So we can see that we have a break of structure, an energetic move to the upside, breaking this swing right here, right? And we can see that we are coming from this order block inside that 1 hour breaker. And I just want to remind you that on the daily, this structure right here is happening inside that daily breaker, right? So don't forget, I didn't want to draw it, keep the chart clean. So as you can see here, we have an expansion, energetic displacement, leaving a fair value gap. The entry is here, your stop loss is here, just below that swing. And now you can target all that consolidation on the upside. And as you can see, price exploded to the upside. And don't forget that midnight open, right? So that's pretty important. Let's outline it here. So this is a classic buy day, right? This is the midnight open, price traded below the midnight open. And if you are bullish, you want to see price trades below the midnight open, vice versa for sell buys, right? That should swing right here, took liquidity from here. It can either retrace to a period or take liquidity. In our case, we have taken liquidity from here. So this is order pairing, right? And we can also see that we have the power of 3 concept. So here we have that consolidation or accumulation. Here we have manipulation, and finally that expansion or distribution to the upside. So this is perfect. Everything is aligned with each other, and we are reading what the market is telling us instead of what we think or what the trading plan is dictating. All right. So I believe we have come to the end of this video. I hope you guys understand. If you didn't, rewatch the video. I believe I simplified everything. Or you can leave a comment down below or DM me on my Twitter account and I'll answer you as soon as I can. Happy trading and good luck.